One researcher is predicting that long-term Bitcoin will suffer massively after the Ethereum merge. The reason being that once Ethereum moves from proof of work to proof of stake, the world and the regulators and governments will then see that it's possible to operate on proof of stake with less environmental impact and will regulate away proof of work. Now, I'm going to be curious as to what your thoughts are and going to discuss this with everyone's favorite guest, Dave Weisberger, who I'm thrilled to be talking with on this Tuesday morning, which feels like a Monday morning because of yesterday's holiday. I don't know about you guys who are in the United States, but it feels very Monday to me. Either way, we got a great show coming up. I'm going to discuss all this news and more with Dave. Let's go.
Let's go.
What is up, everybody? I am Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel and merge your nostrils on the like button. I literally don't even know what that means, but I froze. I had nothing to do there, so I just went with your nostrils on the like button. Yeah, guys, it was Labor Day in the United States yesterday, the day where we celebrate labor by not doing any labor. The irony is thick with that one. Really, I don't think anyone really knows what Labor Day is, except for an excuse to maybe go barbecue and hit the beach and not wear any more white pants in the Hamptons. Because if you're an American, you know that you're not allowed to wear white pants after Labor Day. It's a thing. It's a real rule. It's a very serious rule. But yeah, I'm glad to be back in front of the computer and with the markets, although the markets seem glad to be doing absolutely nothing at the moment. Before we dive in with Dave, of course, I got to tell you all about, we're going to scoot it along. See, that thing doesn't move without my finger. Bullish.com/Melker. Just click it. Click it. Because then they'll see that you clicked it. It's good. You guys know all about Bullish by now, obviously. I actually was just meeting with them potentially at Mainnet, Masari Mainnet, New York, which I believe is like September 21st through 23rd. They're doing all this crazy stuff. If you guys saw their booth in Miami, they had the mechanical bull, which was savage, because I find that people that are in crypto, not that athletic, and all getting absolutely crushed by this bull. Well, I think they're going to maybe have the bull again, but they're also going to have a dunk tank, which you might see Ryan Selkis from Masari has been talking about all the time. And the idea is that I might host the dunk tank and do like rapid fire questions at people about crypto. And if they miss, we get to dunk them, which I think is really fun. And maybe you'll even get to dunk me. So you guys should come to Masari Mainnet. Should do that. Anyways, that's it about them right now. Hope you guys are all, I see all you guys saying hi over here. What's up, Simon Sniper? What kind of car is that in your icon right there? What's up, Jeff? What's up, Dez? What's up, Ian? What's up, everybody? You guys are here. Sorry, I didn't scroll all the way back. So listen, I'm going to go ahead and bring on Dave right now, assuming that he's ready. And we're going to start. Listen, we did something different. I know, Mike, maybe Dave won't be prepared. I don't know. But we sent Dave the news in advance so that maybe we could actually talk about some of these stories without you only getting my takes. And I think the first one's important. But first, Dave, how are you, man? How's everything going?
Well, I'm probably one of those rare people that's glad to see summer sort of coming to an end. Then again, I live in Miami where we can wear white pants all year round. So
that's right. There's no New York white pant rules in Miami. We encourage white pants in Florida all year.
That's right.
Definitely.
But, yeah, I mean, the summer's been, kind of, a dead, boring market. A lot of people out, it's one of those things that, your perspective changes when you move down south. So we'll leave it at that. But I think this sets up to be a very interesting month, which is why it's pretty fun to be talking about it.
It is. I mean, we've historically had sort of people love to call it September because it's generally been a relatively rough month for markets and Bitcoin in particular. But then we know it has happened historically in October, which is massive moves. So much so that in 2021, last year, October 1st sparked basically an entire 45-day run that was absolutely out of control, right? Do you think that seasonality will play in here, or do you think there's much bigger forces at work?
Well, I mean, seasonality always plays in, if nothing else, from volume, right? I mean, people, one of the hardest things, you actually had one of my favorite tweets all summer, where you made the point that that doing nothing is really, really hard for traders. But it's a lot easier to do nothing when you're on the beach when you're like this week, still some people are still at Burning Man, etc. It's really hard to do nothing as you get towards the fourth quarter of the year and you want to justify something. If you're at a trading firm, you need to justify something to your bosses or to your P&L. If you're on your own book, you're looking at it saying, okay, I got to do something between now and the end of the year. Plus, there's also year-end bonuses that get deposited, and people want to decide to do something. In short, doing nothing becomes harder. And as a result, we've seen all sorts of interesting things in the fall. I mean, my thesis is when we talked over the summer was that we have this eye of the hurricane. Now, I don't know what the trailing edge of the hurricane is going to look like. I think there's some really interesting cross currents on the macro side that we definitely want to talk about. I don't know if you sent that to me in news, but what's going on in Europe
Have at it.
is playing out exactly the way that Crypto Haze talked about in June. And it's pretty gnarly to go with the come of the summer surfer metaphor. There's a real chance of mass difficulties with regard to people freezing to death in Europe, right? And in mass inflation in terms of natural gas, which will then feed through their entire ecosystem there. So that's a very big deal. We have the Ethereum merge I know you want to talk about. That is a very big deal. But I mean, my opinion on that is probably slightly different than certainly slightly different than the person that you were talking to.
Mine as well.
I believe that in the short run, you can have all sorts of really interesting cross currents. And it might very well be that Ether is going to be the ecosystem for all smart contracts, NFTs as they go forward, etc. Or it might be that it won't. And there's a value proposition for that. I tend to believe generally and buy the new, buy the rumor, sell the news. I wonder if that's going to play out here. I think there's some reasonable thoughts as to why it won't. But the fact of the matter is people are focusing on a ratio between Bitcoin and Ether when the sum total of the market cap of what will be smart contracts and the sum total of the market cap of what will be a base layer for internet money is so far below what its terminal state is. There's all sorts of analogies, but it reminds me of like kids squabbling on the playground talking about the value of their toys instead of adults arguing over, well, okay, how do we propose or how do we move our ecosystem forward to get to where we want to go? Because at the end of the day, there will be an internet money. There will be a base layer that is a non-sovereign store of value. The world has really only gone since 1971 without one in the entire history of humanity, right? Gold has kind of fallen off that perch and Bitcoin has helped demonetize it. It's still there, but it's not really there. Silver is certainly not money anymore. And you have to look at it and say, okay, we're in the digital era. Will it be a digital asset? The answer is yes. Well, if the answer is yes, and the global money supply would indicate that the total value of that base layer, at a minimum, if it was just a reference price, would be somewhere in the 10 trillion range. And if in fact it's the total monetary supply, it's 10x that.
Right.
Meanwhile, we're sitting here with the entire market cap of crypto is less than a tenth of that. And that includes, by the way, the backbone for what a lot of people believe, myself included, will be a new financial system, a new system for valuing and transacting in art and music, real estate, etc. So really, I find these internecine squabbles between Bitcoin maxis and ETH maxis, I mean, they're childish. And I know it's horrible to call people who are wealthier than I children, but they're acting like that.
Yeah,
it's also pointless. It's sort of like, talking past each other, not talking.
Right. So the idea there being that, I mean, we're squabbling over scraps when a rising tide lifts all boats. And when the market cap of the entire ecosystem is as large as you're talking about, it won't matter which one's dominating slightly or up 5% or down versus the other, basically. But I want to just bring up this very specifically because this guy's I disagree as well, but he's making a very specific case here. And it's not, I think you read this headline, Bitcoin's price may crash after Ethereum's merge. And you think he's saying like on September 15th, price is going to go down in Bitcoin. But when you actually listen to it, his argument is that with time, assuming a successful transition to proof of stake, that basically regulators, it's not a point against Bitcoin. He's saying regulators will say, well, we don't need proof of work at all, the energy FUD, and will basically regulate away, as he said, anything that's proof of work.
Let me ask you a question. This is a really simple thought exercise. If Ethereum is to achieve its goal is deflationary right now. Its goal is, and if you talk about probably the best single easy article for your readers is to go on Crypto Hayes's Medium. I forgot what he called it, but it was written in August. He talked about and he was quoting George Soros, and he's talking about how the reflexive property of assets. And basically, what he said is, as the price of Ether rises, it'll get more and more deflationary, creates a virtuous circle. Right. Think of the end game. How does something like that, which is being staked in order to control a network and a network used for stuff, become a global store of value? It could be, which is controllable by those nodes. The answer is it can't.
Right.
And so the issue is talking past each other. Now, regulators, it's interesting. There's a narrative going on. I mean, look, at the end of the day, propaganda can win, and certainly we've, as a species, have done stupid things, evil things, even at the direction of propaganda. But make no mistake, the whole proof of work, proof of stake notion, as it comes to energy, is exactly that. It's propaganda. I mean, the fact of the matter is that Bitcoin achieving its total, its ultimate vision, the amount the amount of energy as a percentage of what it's doing will be minuscule relative to the amount of certainly the amount of primary energy it will use will be minuscule compared to what the global financial system is using today. And because it can use wasted energy, and because it can be used to stabilize grids, it actually serves an incredibly useful purpose. But those facts don't tend to matter to regulators, but you have to ask yourself why. And the reason is simple. And I'll call it out, just like I called out the SEC before the Wall Street Journal. It's self-interest. Yeah. So the Wall, I was on with you a year ago, and I basically said Gary Gensler is political and is not using cost-benefit analysis, has an agenda, and literally doesn't care about investors. Now, at the time, that seemed rather radical. Now we've had multiple mainstream publications, including the Journal and the Financial Times, saying the same thing. So I'll say the same thing about, quote, regulators that are going after Bitcoin's proof of work. These are people who are paid by the financial institutions. They're paid by the big banks. That's where their donors are. All you have to do is look in the US. Why we don't have a merged CFTC and SEC? It's really simple. The SEC is owned, if you will, or overseen by the banking committees, and the CFTC is overseen by the agriculture committees, and they both have huge donors or donor bases. And no congressmen or senators are going to give up if they're on one side or the other's donor base. So you have a lot of people in Congress, and the same pattern plays out in other countries. Although, interestingly, we'll see what the new PM in the UK is going to do. I've seen some interesting things about her, but potentially being pro some of this stuff. The reality is the old financial system is going to hold on tooth and nail to every piece of economic rent they can. And when they hold on to that economic rent, what is that going to mean? That's going to mean getting their old friend Elizabeth Warren, who loves to yell at them, but she needs to have someone to yell at. Because if she doesn't have someone to yell at, then they can't donate to her campaign and they can't do things. They can't provide a foil for her. So she needs to have someone to yell at, and in that kind of hectoring schoolmarm way that she does. And the truth of the matter is, if Bitcoin does achieve where it goes and Ethereum does achieve where it goes, so that you have DeFi replacing a lot of the economic rent in crypto, a lot of this stuff, a lot of these organizations are going to face disruptive change. Now, they will adapt and they will survive, but that disruptive change is always feared and always pushed against. So a lot of the FUD on the energy side that we hear about is politically motivated. So does that make it non-dangerous? No, it's dangerous. People do stupid things. I mean, people look at the heat wave in LA, and they look at the heat wave in Europe over the summer, and they conveniently ignore the fact that we've had the mildest hurricane season in 3 decades, because if a big hurricane season would have been proof of devastating, climate change narratives. The truth of the matter is the amount of Bitcoin is absolutely, you can't even measure. If Bitcoin mining stopped, you couldn't even measure the impact of climate change. Bijan Lornborg did a really great editorial in the Wall Street Journal where, I mean, he's a climate scientist, and he basically says, yeah, there's issues. We should be focusing on adaptation, etc. It's not that it's not happening. It's that trying to move the U.S. to net zero, even if you succeeded, would only have a small impact. And Bitcoin and its impact on the U.S. going to net zero is literally almost immeasurable statistically.
Yeah.
So this is all propaganda, and there is a danger. Your friend on CoinDesk basically isn't wrong. People will seize upon whatever they can, but
Right.
at some point, it becomes obviously a bad idea to push it. And because it's unfortunately becoming politicized, you're going to see it be a state by state thing. And, Texas is not going back.
Yeah, obviously.
And so, in terms of the U.S., and there are other countries out there, it'll get very interesting. But my general belief is, while we're going to have to endure this through lots of cyclical things, what you'll see is the next bull run will happen. And then when it's weak at the top of that bull run, FUD will start again, and we'll have yet another down cycle, and the volatility will increase, yada, yada, yada. I mean, it's cycle, rinse, repeat, Scott. And, we've seen it. Everyone who's been in Bitcoin longer than I have, since I started in 17, has seen this. And it is still following the same trajectory.
Yeah, I agree 100% with everything you just said. And I can see people in the comments saying, hey, Dave is scaring me. Me too. Not as much as Harry Dent, who came on and said Bitcoin was going to like 1,000. I don't know. But it is scary, because what you're describing is basically rational thought having to overcome political motivation. Right. And that's not something that we necessarily see regularly happening. So he could be right that they will attempt to regulate it away if common sense doesn't win, and which I think then just comes back to, the power of our industry to educate or start to replace, frankly, some of the money that's going into those politicians' pockets.
Well, I mean, look, let's also understand that in the world, there's always this, and I always use this analogy a lot. The Federal Reserve is doing this. This is a right hand, left hand, do the real stuff back here, but make lots of noise over here. So what's the Federal Reserve doing? Well, they're raising interest rates here. And if you looked at, once again, go back to Mr. Hayes, but he actually documented it really well in his most recent missive, they're actually been injecting some liquidity into the system. So and that's been my theory all along. They will continue to raise rates, but put in liquidity in order to cushion impacts, etc. If you look at what's going on in the Bitcoin world, there's a lot of smart money in there. And a lot of those people are a lot of the people who are invested in Bitcoin, slowly investing in Bitcoin, and have been becoming part of those hodlers, are not the people, not the cypherpunks from the days of yore. Yes, sure, there still are plenty of those, but there's a lot of smart money there. And if you look at the trading of Bitcoin, it certainly doesn't feel or look like it's going anywhere near zero. In fact, resistance becomes support, yada, yada, but it looks like, I feel pretty confident that we're not going to break the lows of the last trading range unless there's a real financial tsunami and we see a 50% drop in risk assets, in which case Bitcoin will follow NASDAQ and the S&P lower. But the truth of the matter is, if you have this sort of right hand, left hand with the Fed, and I can't see if it's all in the camera, the reality is that I think Bitcoin will delink at some point, and you'll see another.
It always has.
Yeah, you'll see another move higher.
Yeah.
When the market starts to recover and people start to inject liquidity. And obviously there's so many cross currents this fall, right? The Ethereum merge is something that will have an impact. I mean, there are people who all they do is trade the ETH Bitcoin ratio. And those people it's going to trade. It will probably look like, if the Ethereum merge is successful, it will look on paper like a parabolic move upward. Does that mean Bitcoin has to drop? Well, maybe a little. It doesn't have to move that much for it to start looking parabolic. But what generally happens with parabolic advances, Scott?
Oh, they end. We know. Listen, I have that. I happen to just have that chart here. Let me see if I can get that up here. Yeah, I mean, it already looks parabolic if you look down to the June lows. This is on the daily chart, but I mean, yeah, it already looks that way, and we just started.
What does it look like? What does it look like if it doubles? Doubles off the previous all-time high.
Oh yeah, because the previous all-time high is still up here. So this is a small move when you zoom out.
There's room for for that chart to move. And honestly, if the merge is successful, I expect it to break the previous all-time high. But that's going to be because Ether would be running. Now, the Ether will be running mostly because market makers will have to short cover the spot as they unwind their futures positions, which have been backwards for a while, and that will all there's a lot of internal.
Well, that trade is backwards because everybody wants free hard fork coins, right? And so if you're gonna buy spot, you have to short the future, and so therefore you end up in backwardation, right?
Ask yourself how long lived the rally on Bitcoin when there were hard forks around Bitcoin were, and what the value of those hard forks were.
I actually wouldn't be surprised to see that parabolic advance break down at the merge and then restart as the sort of supply actually diminishes. But I guess it can play in.
No, anything can happen. I'm not talking about from a technical point of view.
Yeah.
I mean, what are the odds that the hard forks of Ethereum are anything other than 5-10% shadows, or less? What's Ethereum Classic worth, and why is a fork of Ethereum worth? What's the point? Why should there be?
No, it has no value. Just miners that don't want to. I mean, that's actually the next topic that I have. I mean, literally, like miners are going to hold on for dear life because they've invested a ton of money. But I have this right here. It was literally the next story. Ethereum's merge starts to hit gaming chip prices, right? And people, I mean, you mine Ethereum. They're both proof of work, but you're using gaming chips to mine Ethereum, and you're using a different kind of rig, obviously, for Bitcoin. So there's nuance there. But basically, I mean, it's already happening, right? These guys have nothing to do with them, and it's actually crushing the manufacturers because not only can the manufacturers not sell their cards, we have this flood of used cards coming onto the market, basically. I mean, the numbers are already pretty astounding. I think they're trading down, I have it here, 45% in price from the last quarter already, and seeing 13% decline year over year. And that's just, I mean, and the argument there is that not only is that going to affect Ethereum, I don't think it affects Bitcoin, to be quite frank, but every other proof of work chain where these miners can then take those coins and go mine and increase difficulty, right? I mean, that's right here. Look, there's an article on that right here. I mean, Ethereum urged to swamp other coins with miners, right? And that's from a mining CEO.
Right. So basically, you'll see a hyper-competitive industry where there's overcapacity, and it doesn't look or feel any different than, I mean, lots of other examples. I mean, I'll never forget after the internet bubble in 2002, the value of cable operators and fiber operators, people who had built out network infrastructure. Now we've caught up to it, obviously. These things take time. If there aren't use cases for other coins that miners are mining, then those miners are screwed. They will fade into they'll fade into the ether, as it were, and so be it. But what does that have to do with the price of the underlying chains and the value of the underlying coins? I mean, mining is still at its core validation, one way or another, to secure a network. What it means, though, Scott, and this is the one thing that is important, and the one thing that if I sounded all like a Bitcoin maximalist on anything, the Ether accepted as proof of stake is the biggest concern with a lot of the altcoins, and some of them, some people will call them shitcoins, but a lot of altcoins is, will they be subject to a 51% attack? Well, understanding that a mining deluge, which swamps profitability, could potentially harm the integrity of alternative coin chains. Now,
agree.
This is like playing chess 6 or 7, 8 moves ahead, depending on lots of other variables. So it's not the kind of thing that I would tend to want to invest upon, and God forbid anyone invest upon my opinion here. This is not investment advice. This is do your own research. But if I were investing in any altcoin in any serious way, I would want to understand the mining setup. I want to understand the network integrity, and I'd want to think about what happens if there is a glut of mining capacity that can shift to that coin, and what does it matter? There are some that it won't affect at all, and there are others that it'll affect in a big way. So everyone really should research that. But that is absolutely, I mean, look, it's economics. I mean, supply and demand. You have all these GPUs, and the used GPUs in particular that you can't necessarily use in virtual reality rigs and augmented reality, which is taking off at the same time. And there are use cases for GPUs, right?
Yeah, I think they're going to the dumpster, a lot of these.
But that's the point. And on its way to the dumpster, what happens? And I don't know the answer to that. I am nowhere near versed enough.
Actually, we have an interesting conversation surrounding this going on in the chat that I just want to address because I know that you'll have thoughts on this. Post-merge, lots of staked ETH could be sold, says Chuck. I just want to clarify, basically staked 6 to 12 months, so you don't have to worry about a glut of supply hitting at any given time. So it would be very, very spread out as to when those coins would hit the market. Not saying people wouldn't sell them, but most people who have staked ETH now are doing it because after the merge, they expect the yield to double. So there's not I'm sure there are, I'm not saying it will, but that's the expectation, that the yield will increase. I don't think most people staked in the contract just so they could sell at the merge, but I could absolutely be wrong. But either way, much like the Mt. Gox sort of FUD with Bitcoin, this is not one huge tranche of supply hitting the market at once. I would love your thoughts, Dave.
Well, I mean, that's part of the reason that in the beginning of the summer, I thought ETH would rally into the merge, and then the merge would be a saleable event. That's what I thought would happen. Obviously, that did not occur. The risk markets, risk assets all around the world have been faltering, or as the Fed has gotten more and more aggressive in rate rises. And so while relatively ETH has rallied, it certainly hasn't rallied in absolute terms. So the real question is it still a sell the news scenario? Part of the sell the news scenario, there's two reasons. There's always two reasons. There's one, the speculators will be driving the price up and they need to get out. Looking at open interests, looking at funding rates, that really isn't happening. So that's moderated that opinion. But
although Ethereum open interest is higher than Bitcoin right now, which is not something that happens too often. So you can see, like you said earlier, that this is the trade. It's just not as big as you would have anticipated.
Well, but it's
not being played that way.
The open interest is higher, but the basis is negative.
Correct. Right.
Which does not indicate that the opener are long. The opener,
right.
The opening.
I mean, shorts are paying to be short, right? So,
right. So it's a fascinating cross current. But Chuck's point is non-trivial. I mean, look, it didn't work out that way, but there was a time period when one large firm that is now in bankruptcy proceedings was betting the farm on staked ETH and ETH converging, right? Well, what does converging means? It means that you could sell one for the other, and so who knows how all that will play out? But there's a non-trivial percentage of the staked ETH out there that frankly will have to be sold. With ETH,
people have to take profit. Right.
We're not talking about individuals. We're talking about firms who have assets in bankruptcy where they need to be sold to pay off the creditors, where they'll wait until the two converge, and then at that point it's liquid. That is a non-trivial point as well. But once again, there's lots of cross currents. As I said, there's the market making side. I don't know which way it goes at this point. I usually have a stronger opinion. Right now, I guess I am moderately bullish into the merge because I think it will succeed. And I would probably fade any parabolic rallies after the merge, but who really knows where it's going to go. But as I said, these cross currents are complex. This is not as simple as a normal, I think that so-and-so is going to blow out earnings. They do blow out earnings. And then you see the stock drop and you go, why the hell did the stock drop? The answer is because everybody thought they were going to blow out eurnings, right? It's not the same.
Yeah, and the market generally reacts the wrong way at first, anyways. So, so good luck with that. I mean, listen, it's amazing. Hearing you sort of like quietly describe, obviously, Three Arrows Capital involvement in this market and how that's going to continue to resonate even through things like the merge, right? Because it's just they have to get liquid in bankruptcy, and so does Celsius, and so does Voyager to some degree potentially. It's those currents are affecting everything.
That event isn't that the series of events that we saw, and I'll actually be talking about this in Masari. I'm doing a talk on lessons from the
You're there. Nice.
And it's without going into what I'm going to talk about at incredible length, what I would say is something very simple. 2 points need to be made. Point number one, it will trigger a better market in the end, where people are understanding counterparty risk and understand, what are the actual risks that they're taking. Whereas right now, that's not at all clear to a lot of people in crypto. That is important. It, on the other hand, is something that has caused confidence in crypto to take a hit. I mean, my folksy way of putting it, when people see, when people come into our offices or people hear what I do, the first question is this crash going to continue? Is what's going on? Is it dead? Are you guys getting out of the market? It's a different question. It's not we haven't reached peak bearishness. We haven't reached, it is dead, I don't believe in it anymore. But we have lots of people questioning, lots of people wondering, because guilt by association is a very powerful thing in the human psyche. When they see that assets they thought were safe go poof, people are like, well, then guilt by associate that with another method. And obviously the OGs in crypto will say, well, not my keys, not my coins, I hold it on my wallet, they can't take it from me. Why would that impact my opinions? The reality is the vast majority of people, to get to global acceptance, are going to need to be able to trust somebody. Nobody wants to manage everything themselves. There's a reason why self-directed trading is still only a small percentage of assets under management. It's just a fact. Self-directed trading may be a lot of the trading, but people who still outsource their trading and their investments to financial advisors, pension funds, etc., that's not changing anytime soon. And so those institutions were set back a year or two based on what happened this summer until we get to some form of regulatory clarity in the United States. There's no doubt. And that's a big deal. And people need to understand that doesn't mean that we can't continue to have cyclical ratchet ups over the course of whatever this is going to be, but it does mean the cyclical nature is going to continue. We are not going to achieve any sort of lasting lack of volatility sort of appreciation of crypto until there's regulatory clarity and those marginal players that control the vast majority of financial assets in the world feel confident. Now, they do, interestingly enough, unlike crypto winter, and it is different. This is, and I have at Coinroutes, we have this perspective because we talk to everybody in this space. And in crypto winter, when we were talking to banks, brokers, etc., I can't tell you how many conversations I had saying, sometime around 2018, we were gearing up to do this, but now they're shelved indefinitely. That was what we heard from every broker, from every whatever. Hell, FINRA wouldn't approve a single license, and broker dealers couldn't do anything. That's why Robinhood famously set it up as a subsidiary. Today is different. It is actually different. Today we're hearing, we think that we're part of the solution. So we think, whatever, and I'm not going to give names, but, very large players saying, we think that us entering the market will help instill that confidence. And so we are proceeding. They're still wanting regulatory clarity, but it's no longer indefinite in the future. It's now a very, very clear path toward getting larger, widespread financial firms to participate. And that is different.
Yeah, and you could argue that, regulators, the asset, at least in the United States, that they may look most favorably upon would be USDC, because obviously, they know that they're generally backed and they've been working closely with regulators. But then you see stories like this. Binance, issuer of third biggest stablecoin, to stop supporting larger rival USDC, right? I mean, Binance controls roughly half the volume in the crypto space, right? If you go all the way down the risk curve, and they're effectively eliminating USDC completely from the platform at the end of the month. All USDC, I think it's not just USDC, but they're not, interestingly, nothing to do with Tether here, but TUSD, USDP, and USDC will automatically be converted to BUSD, BUSD, as I like to call it. This is a monster move by Binance to consolidate people, obviously to consolidate their customers into their own stablecoin. I can understand why, as a company, they would not want to allow the competitor. But USDC was gearing up for, a flippening of its own of Tether, 10, 20 billion behind in market cap. And they're just having a leg cut off here. What do you think of this?
I think that of all the moves that CZ has made, I think this is the dumbest. I think that every time I can think of in my life when people have tried to use their critical mass to stop something that's disruptive to them, it generally bites them in the ass. I think Sam is probably licking his chops. I think that this gives another opening for FTX to become. I think this adds to FTX's market cap, because it means FTX, which allows USDC to be freely convertible into dollars. It just makes it easier. The only thing that mitigates against this being an absolute catastrophe for Binance and basically forcing Binance to the retail fringe as opposed to the big institutional side, which is what this move could do, is there is a lot and fairly this is a tough topic, but there is a lot of concern among many people foundational in crypto. I call me someone, I'm not foundational in crypto at all, I don't think, but I'm concerned as well. And if I'm concerned, you can imagine about USDC's immediate knee jerk on the Tornado Cash. And the fact that USDC is centralized and therefore censorable is one thing that is seen as very problematic inside crypto. If it were not for that, the fact that they are basically trying to kneecap a coin that is a better hope. I don't think you could find a serious crypto trader. I don't think you could literally find any who wouldn't prefer to see USDC continue to push Tether towards being more backed, more transparent, more auditable, because that has been a piece of FUD that's hung over the industry forever. And I think most of us think that at this point they've gotten their act together, but it's not as clear. Whereas USDC, there's no question. It's freely convertible. There is no breaking the peg because it can't, because of the way it's managed.
Yeah, it's cash and short-term treasuries. I mean, it's the most liquid assets possible.
Most traders would prefer that stable coins throughout the crypto ecosystem be more like USDC. And so it's not a good thing for the ecosystem to see this sort of stuff. Do I think it really matters that much in the global scheme of things? Probably not, because there's very little volume on Binance and USDC.
Right, it's in Tether anyways. Yeah,
in Tether. So it doesn't matter. But it is really important to understand that stable coins are undeniably a huge use case for crypto. And stable coins, the biggest difference between a USDC style stable coin and its natural competitor, which are CBDCs, is that USDC can't be programmed away from people. You can't control people's financial world like you can with the CBDC. And so that's why there's a battle even in the US of whether we'll actually go that road. Why do you need FedCoin if USDC is fully regulated, or there are others?
Yeah, USDC becomes the proxy central bank digital currency without them having to do that. I mean, our good friend Chuck said that just now. USDC is just a couple steps away from being a US CBDC.
Right.
And that actually may work out perfectly, right? And that may be exactly what they want.
Right. But the point that I'd make to Chuck is this. I don't think he's wrong. I think that if you look at the things that the central bank cares about, our central bank right now doesn't care about being a political weapon for the ability to shut off people they don't like and censor people they don't like to basically stop them from spending, which if you had a Fed coin is a very real possibility. But what they do care about is OFAC. What they do care about is money laundering. And so the fact that the fact that USDC is playing ball with what I think is a very bad precedent. I want to be really clear. I'm not supportive of this. I think it's a very bad precedent to sanction code. I think that should end up in front of the Supreme Court. It should be a First Amendment question, not a lawyer. I read other lawyers on the internet who kind of agree.
Yeah,
who are angry. But but the fact is, the arm's length ability to have a private thing which can satisfy the number one goal, which is to prevent money laundering, but not be able to do the things that China is doing with their CBDC, to be able to have people cut off from the financial system if their social score drops or if they protest the government, etc. That's actually pretty desirable to a lot of people in the middle of the political spectrum. I'm not saying that I personally love it. Obviously, I'm much more, libertarian. You can all hear my freedom, screaming, in my when I do get political. But the reality of the situation is, it is clear the events of this summer do make it more likely that they will go that route. I mean, after all, keep in mind the Federal Reserve is still those are private banks. You know,
Yep.
it's like it's not it's not what people think. It's not a full extension of the government. So it is more likely than not given this, but we'll see how it goes. But it's a big cross current that goes on in the crypto world for sure. None of that
Yeah.
has a damn thing to do with Bitcoin's value, though, because there's no version of the world where Bitcoin's value has anything to do with being a central bank, currency in the sense of the United States. But it very well could be a store of value. And yeah, if you believe in hyper Bitcoinization, then maybe it could at some point in the future. But it's really about a non-printable store of value as opposed to something that can print. Having a central bank digital currency does not in any way stop the government from printing more money.
Right.
So
That's why it's Bitcoin. I mean, that's why still, even in my mind, you kind of touched on it earlier when we were talking about the merge, right? People, you kind of asked the rhetorical question as to how does that in that process with staking become a store of value? And the obvious answer was it doesn't, right? And that's to me why it's still clear that it's Bitcoin and everything else. And that's not an insult to the everything else, right? And that's what I think I wish like Bitcoin maximalists to some degree would understand, that you don't need to be triggered by every time something that's called a cryptocurrency does anything. It's not a threat to Bitcoin. They're completely separate. And I really don't think that most people are viewing Ethereum as a future competitor to Bitcoin who rationally look at it.
Well, there clearly are some.
There's some, yes, but I'm saying it's the loudest voices in the room. I don't think that's the consensus opinion.
No, I mean it's a different thing. I mean, it is a different thing. I mean, in a world where a certain percentage, a very large percentage of Ether needs to be staked in order to control, basically validate, what on the margin allows it to be used in smart contracts? Well, the answer is the value of the smart contract has to be more than the value of the validation. And so it's equilibriums that have to be reached. And you can model it all out, but it's not the same as an asset that is underlying the value of everything. Those are different things. And I don't understand in my mind why, as I said, it feels to me, I'll keep saying it, every time I see these arguments on crypto Twitter, I think of children on the playground. I don't think of rational adults thinking about what their long-term best interests are. I think it's people who are butthurt about one thing or another yelling at each other. And I don't really understand why why we all have to be pushed by that. But hey, there it is, loudest voices in the room.
Yeah, makes perfect sense. Dave, I kept you far too long, so thank you for giving us the extra overtime. I figured you'd stick around if I kept asking you questions. So we appreciate that. I know everybody always loves sharing your opinion. So I just heard you're going to be at Mainnet. That's Masari?
Yep.
Okay, well, we're going to do this in person then, because I'm going to be recording there. We'll do another one. That's
okay, cool. Yeah, I'll be there the 22nd and 23rd. I have a previous engagement north of the border on the 21st, but I'll be there for the last 2 days. So should be
awesome.
Fun.
Well, thank you, everybody. It's tagged in the tweet, but follow Dave, please. One of my favorite people, obviously, and one of yours. And now, I'm competing for most frequent face, seen opposing mine on the screen. I think we've probably had you here more than anyone else. So if that's a testament to how much we love you, obvious. Thank you again, man.
Take care, Scott. Enjoy September.
Oh, God. Everyone, ladies and gentlemen, Dave Weisberger. So yeah, we kept him a lot longer, but that was kind of a fun format for me, actually, being able to have another and well-informed and often better informed opinion on the news that we were sharing. I do have a few more stories, but I didn't really want to waste Dave's time thinking with them because they're not so serious, discussing them, I should say. The first one being this, and I would just title this story, "This is why we can't have nice things," right? Hacker steals Bill Murray's crypto after 185K NFT charity auction. Did you see this? Basically, they raised all this money for charity. The money went into Bill Murray's personal wallet, where, by the way, he holds hundreds, apparently, of NFTs, a lot of them being blue chip, and hackers immediately just stole the funds, right? This is Bill Murray, like arguably one of the most fun, likable, lovable, amazing people on the planet, and they just went ahead and targeted him. And this guy has like a full security firm called Project Venkman, which is hilarious because that's obviously his character from Ghostbusters. What a good name, right? And they were able to actually divert most of the assets by writing a script to transfer all of his NFTs into cold storage immediately and stop the bulk. But still, $185,000 hacked directly from Peter Venkman. Really sad, stupid. It's really annoying, man. It's really annoying. Like, leave us alone, man. There's a reason that we have people have bad opinions of the crypto space. Elon Musk says 90% of Twitter comments are bots. Binance CEO CZ agrees. Now, Binance CEO CZ definitely agrees because 90% of the comments are bots, and 90% of those bots are pictures of CZ, right? If you guys have ever looked under a tweet specifically of Elon Musk or anyone in crypto, you get hundreds and hundreds of fake CZs telling you to click some phishing link that wants to steal your crypto. It's absurd at this point. Twitter, listen, we all love Twitter. It's sort of the core social media platform for crypto, but it's also a breeding ground for absolute nonsense, bots, scams, and it's disgusting, and it's annoying, and it's almost unusable, right? It really is. It really is almost unusable at this point, because if you have a sizable following, you can't read the comments. You just can't. You can't read the comments, which kills the ability to have a conversation. Many people have gone private or turned their comments off altogether. But this seems like an easy problem for Twitter to solve. It's not happening on, I don't know, Facebook. It's not really happening on Instagram. It happens some degree on YouTube, but they just got to fix it. This has to be fixed. It's absolute nonsense. And the last story here, LG Electronics launches NFT platform that lets users buy and sell digital artwork. And this is with Hedera, of course. A lot of you guys obviously are fans. Actually, today's podcast that's out already on Apple, Spotify, etc., and will be out this afternoon on YouTube, coincidentally, is with Mance Harmon, the CEO of Hedera. So that's a really interesting conversation you guys should look forward to. We had that conversation at Consensus, rings very much true today. But basically, LG, listen, we've seen Samsung make some huge moves already in the NFT and crypto space. LG trying to play catch up here, using the Hedera network to offer an app that enables users to purchase NFTs via Wally PTO, whatever the hell that is, LG's crypto wallet for smartphones. So you'll basically be able to engage with the metaverse, Web3, NFTs, etc. This is the first iteration of it on your LG TV. Cool, man. You know, I think it's cool that we're doing things like this and seeing it in the crypto space. And if you show this, as Dave and I were kind of discussing, like if you show this to a hardcore Bitcoiner, they would just scream about how it's a scam. And in some way, LG should be doing a deal with, I don't know, Bitcoin developers to make Bitcoin TVs. I have no idea. But like I said, this is where, in my view, it becomes very clear that there's Bitcoin and everything else. Everything else are very cool evolution of technology, that blockchain will become an underlying technology in many of the things that we use that you won't think about. It'll just be powered by a blockchain. You'll go on your TV, you'll buy NFTs. You won't think about what blockchain's doing it or how it's doing it. I think that is great. I think it's good for the world. And I think that that is absolutely no threat to Bitcoin, right? Takes nothing away from the value proposition or importance of Bitcoin. It just happens to be on a similar underlying technology. Tommy wants to know he does not have a TV anymore. Well, then have fun not being able to trade LG NFTs, right? Scott, do you know if we get hard forked ETH on hardware, software wallets? I have not dug in so deep to the specific logistics. I know a lot of exchanges have already announced their support for the forked coins. I'm imagining that you will. I mean, generally in the past, hard forked coins have been supported by the big hardware wallet companies. It would be a major violation of the ethos of crypto for you to have to move your coins to an exchange to receive the fork. But yeah, I mean, we'll see. Jordan Peterson eviscerates Twitter CEO in his latest video. I will have to watch that. Russia stopped the pipeline. Well, fuck, says the Shaolin 015. Yeah, well, we have economic sanctions. They have energy sanctions. I mean, Dave alluded to it earlier. You know, there's going to be a lot of people freezing potentially. What we didn't even talk about, and listen, I'm no expert on, but we're already seeing reports, at least anecdotally, famous chefs in the UK, things like that, saying literally that their electric bills have 10x'd in the last couple months. So yeah, it's very sad, obviously, that people are going to freeze. That's a bigger problem. But also think about the amount of businesses that will potentially just be evaporating. If your energy bill for a restaurant was $2,000 and goes to $20,000, your margin is gone and you're now operating at a loss. I don't care who you are, right? You can't have a 10x increase in something that you've planned for and calculated at effectively a fixed rate over time to go up 10x and still remain in business, right? And so I really think that it's going to likely send Europe into a major recession, of course, which is probably arguably already happening. But the implications of that pipeline shutdown, obviously, and the sort of energy crisis in Europe, I think is going to be that may turn into we talk about obviously the Fed and policy and the merge is going to hit right when the next inflation print hits. The Fed's going to have a meeting. We have a lot to do here in September. It should get exciting. But it could be a very, very ugly winter for markets if this energy crisis in Europe plays out in the way that we're sort of talking about here. Yeah, I mean, Sam says depression, potentially. I don't like to be too hyperbolic or exaggerate too much. I don't really know what will happen. I just know that it's really bad, right? So not ideal. So I should mention to you guys, I mentioned this on a show before I go. Vegas. I'm going to, and Dave, I see you back there still watching. You're invited. So I'm going to talk to you about that offline. But Vegas from October 10th to 13th, there's a show called WebEx. It's W3BX. It's a conference October 10th to 13th. And I'm hosting, we're trying something new here. I'm hosting an entire stage. So basically, anyone who's caught up with me at a conference before sees me huddled in a corner, kind of shooting podcasts like 12 in a row all day without eating, drinking, or going to the bathroom. Kind of when I get to when my hustle gets to really shine. Well, I'm going to be doing that basically live on stage for 4 straight days. We're going to have people hosting master classes, so it's not all just me. It's a very retail focused show. So I think a lot of it will be focused very much on the basics. Masterclass. What is DeFi? What are NFTs? Why is Bitcoin important? So I'm going to have other people who are experts. Basically, I'll host it and then they'll go ahead and give those master classes. We're going to do panels. I'm going to do a bunch of live podcasts. It's going to be 4 days, you guys. And so it's in the description below. I get nothing out of this, to be very clear. I just want people to show up so that it'll be great. You get a 20% discount on your ticket. They have all kinds of levels of tickets. It's in the description. But there's an opportunity. We're going to do we haven't planned everything yet, but I'll be hosting happy hours where you can literally just come hang out and talk. I want this to be a very informative and educational at first, but also an opportunity for me to interact sort of with you guys, with the community, get to know people, and just have a really good time for 4 days. So we're going to be live streaming the whole thing. If you can't make it, then we're going to be taking a lot of it and, publishing it as podcasts and stuff later. It's going to be really awesome. So if any of you guys can make it to Vegas during those dates, October 10th to 13th, I'm going to keep telling you about it. It's the first time I'm sort of putting my name on a stage, and, so we're inviting our own guests and lining it up. I think it's going to be really, really awesome. So I hope any of you guys want to come. I don't know, go hit the driving range because it's at the Wynn. They got a golf course in the backyard. Have some drinks and see some amazing content. Dave, we're going to bring you. We're going to get you there. Anyways, guys, that's all I got for you today. We'll be back tomorrow. And I think we're going to try to keep pushing towards this new format where we, kind of let the guests give their takes on the news as well. So it's not only my bad takes and horrible opinions. That's all I've got for you guys today. I will see you tomorrow. Thanks and peace.
That's dope.